Thousands of pensioners across the UK have recently experienced a surprising financial twist, this time in their favour. Over the past year, a large number of retirees have been refunded substantial amounts by HMRC, after it was revealed that many were overcharged tax when withdrawing from their pension pots. While the news of being overtaxed might initially sound like a setback, for some individuals it has turned into a six-figure reimbursement. In fact, some pensioners have been given back more than £10,000, and in rare cases, over £100,000. The numbers are staggering, and they shed light on a little-known issue that's quietly affecting thousands of people across the country every year. The refunds stem from how pension withdrawals are taxed in the UK. Since 2015, individuals aged 55 and over have had greater freedom when accessing their defined contribution pensions. This system, known as pension freedoms, allows people to take out cash from their pension pots when and how they choose. But while this flexibility offers more control, it also comes with hidden complications. One of the most significant of these complications is the emergency tax rate, which can temporarily result in far higher deductions than expected. HMRC treats the first withdrawal of the tax year as if it will be repeated every month until the end of the year, applying an emergency tax code by default. This assumption can cause large one-time withdrawals to be taxed heavily, often far beyond what is actually owed. According to newly released data, around 60,000 pension savers claimed refunds from HMRC in the 2023-24 tax year alone. This figure represents a 20% increase compared to the previous year, when approximately 50,000 claims were submitted. This sharp rise points to a growing awareness among pensioners about their rights to reclaim overpaid taxes. While not everyone receives massive amounts, the refunds can be substantial. More than 11,700 people received refunds worth £5,000 or more. Among them, over 2,400 were given back more than £10,000. The average refund was valued at £3,342, which is nearly 10% higher than the average refund from the previous year. Even more eye-opening are the top 25 highest refunds, which averaged an incredible £106,900 each. These figures were obtained through a Freedom of Information request made by a UK-based financial organisation. Experts analysing the data have pointed out that the scale of these refunds illustrates just how many people are caught off guard by the emergency tax system. For those withdrawing pension savings for the first time, the shock of seeing thousands of pounds deducted unexpectedly can throw off carefully prepared financial plans. While it's reassuring that the money can be claimed back, the process is not always immediate. Many retirees only realise they have been overcharged after receiving less money than expected, prompting them to investigate further. In response to growing public concern and rising refund claims, HMRC has taken steps to improve how emergency taxes are handled. From April 2024, a new system was introduced that automatically updates tax codes for individuals who start receiving private pensions. This change is designed to reduce the number of people charged at emergency rates in the first place. The goal is to process refunds faster and improve overall accuracy. However, the problem hasn't disappeared entirely. Despite these improvements, emergency tax is still applied in many cases when people access their pension pots for the first time or make large one-off withdrawals. The total amount refunded to pensioners since 2015 now exceeds £1.4 billion. This figure highlights not only the magnitude of the issue but also the importance of being informed about your tax rights. While HMRC insists that no one ultimately overpays, the reality is that unless individuals actively claim their refunds, they could end up waiting months or longer to receive money they're entitled to. Fortunately, the process of claiming a refund is more accessible than many might assume. There's no need to pay for a financial advisor or third-party service to assist with the claim, as the steps can be completed directly through the government's official website. To reclaim overpaid tax from pension withdrawals, individuals can use specific forms available on gov.uk. If someone has taken their entire pension as cash or received a small pension as a lump sum, they should use a P53 form. However, if they have fully emptied their pension pot through flexible access, they'll need to use Form P53Z instead. In cases where someone has received a serious ill health lump sum, additional steps may be required. Regardless of the situation, Accurate information is crucial. Applicants must declare any other expected income for the current tax year, and in most cases, they'll need Parts 2 and 3 of their P45 from the pension provider to complete the process. Without the correct paperwork, HMRC won't be able to process the claim. While the idea of filling out tax forms might not be appealing to everyone, the potential refund makes it well worth the effort. Many pensioners have been surprised at how straightforward the process is, especially when done online. The government's digital services allow for fast submission and, in most cases, refunds are processed within a few weeks. There's no need to wait until the end of the tax year. People can submit their claim as soon as the overpayment occurs and documentation is available. Looking ahead, experts advise pensioners and those approaching retirement age to familiarize themselves with how pension withdrawals are taxed. Understanding when and how emergency tax applies can help people plan more effectively and avoid unpleasant surprises. Those who take lump sums for large expenses, such as home renovations, travel, or family support, are especially vulnerable to being overcharged. Being proactive about tax planning can lead to significant savings and a smoother retirement experience. While it's easy to focus on the negative aspect of being taxed too much upfront, there's a silver lining. The increasing number of refund claims suggests that more pensioners are becoming empowered and informed. This growing awareness is a positive trend, especially as more people rely on their defined contribution pensions to support them in later life. It also puts pressure on HMRC to continue refining its systems and reduce the need for refunds in the first place. In recent months, the issue of tax overpayments has gained more attention as other changes from HMRC begin to affect various groups across the UK. Whether it's related to child benefit eligibility, new rules for motorists, or income declarations, the government's evolving tax policies mean staying informed is more important than ever. For pensioners, knowing their refund rights could make a real difference in their quality of life during retirement. Even for those who haven't yet drawn from their pension pots, it's useful to know what to expect. Planning ahead can help minimize the impact of emergency taxation. By spacing out withdrawals, checking current tax codes, and being prepared with the correct forms, pensioners can reduce the likelihood of being overcharged in the first place. And if a mistake does happen, knowing how to fix it quickly ensures that money isn't left sitting in government coffers unnecessarily. Ultimately, the rise in pension tax refunds is a reminder that even in retirement, being financially informed pays off. Whether it's £300 or £100,000, every pound counts when it comes to planning a secure and comfortable future. By taking the time to understand the system and claim what's rightfully theirs, pensioners across the UK are reclaiming not just their money, but also their peace of mind.